Of the biggest market stories from the past week. Join host Serin and financial expert Bruce Campbell as they go beyond the headlines to deliver cutting-edge insights into news that move the market. Proudly presented by the Canadian Securities Exchange.
Hi, my name's Serin, and I'm Director of Listings Development with the Canadian Securities Exchange. You're joining us for yet another market recap on Friday, May 20th, 2022. I'm, of course, joined by my wonderful co-host, Bruce Campbell with Stonecastle Investment Management. Bruce, how you doing today, buddy?
Yeah, it's a rough one. I was thinking of wearing my helmet.
Your phone must be quite busy, I would imagine. So for those of you who have been living under a rock, it has not been great in the markets, and you should go back under that rock perhaps and take a little siesta. We're going to break down what happened this week. There is another week of down markets. We're going to talk about that, what you think about it, and you're going to tell us exactly when it stops, right, Bruce?
That's right, yeah.
We're going to talk about the name sentiment at lows. I'll explain to you what that is. We're going to talk about the earnings that were released for Target and Walmart and what ensued. It was not pretty. And then we're going to see, what the opportunity is from all of this. There's got to be something good that comes from this, Bruce, and you're going to tell us what it is. And of course, we're going to end off with CSE issuer news. So let's talk about the down markets. What's going on?
Yeah, I mean, we've talked a lot about this in the past, but it's still a continuation of what we've talked about. The market's still really concerned about inflation and what that means as far as interest rate hikes that the Fed will have to do. And it just keeps, kind of hitting the market. And it hasn't been, there's been some fairly negative down days, but we haven't seen any, kind of panic ensue per se, but we just see day after day, and then it's turned into week after week. So unless some sort of miracle happens in the next hour with the markets, there's a good chance that we're going to drop for the 7th straight week in a row. There's not too many instances of that in history. And so, things have become very oversold, and it really revolves around a few different factors. One is that the Fed is trying to engineer this, soft landing that they use, but the market's concerned that it's not going to be soft. It's going to be a crash, like they're going to crash the economy and put us into a recession. At the same time, we're seeing, some numbers from companies reporting that is indicating that the consumer is certainly being affected by inflation, and how can they not be? And, you put that all together, and it's a lot of uncertainty, which the market doesn't like, and it's just people heading for the exits.
So I have to tell you this, I cheated on you this week, and I interviewed other economists. I'm sorry, Bruce. It was wonderful. What can I say? So I had the opportunity to chat with David Rosenberg, and, he kind of said, look, we're paying for this. The markets had never been that good for that long, and now we're going to pay for this. So do you have any thoughts on how long this might go on for?
Yeah, I mean, that's the $1 million question that everybody's asking, is how long it will go on for. We have our own personal theory on that. I do kind of throw the challenge flag a little bit on what, David was saying, because since 2018, which isn't really that long ago, we've actually seen 3 bear markets now, which is a drop of 20% or more. We saw one in the December of 2018. We saw one in March of 2020, and now we're seeing one in call it May of 2022. So we've seen 3 bear markets. So to say that they've been, the market's just been too good for too long, I don't necessarily know if I agree with that. That being said, I mean, there's been a record amount of stimulus that's been thrown at this market. So that all really does have to unwind.
Yeah.
The thing that, we kind of look at is we think that, the Fed's trying to engineer the soft landing, which, there's not a lot of history of them actually being able to do that. And so typically what they do is they overshoot, and then they have to go the other way. And we think that's eventually where they're going to get to. We don't think it's there yet. I mean, they're still talking pretty tough about the fact that they're going to raise interest rates in the next 2 meetings for sure. But after that, they might be raising interest rates into a really slowing economy, and then they'll have to go back and reverse and go the other way, at which time they, add back stimulus, they cut rates. And I mean, that was ultimately why they wanted to get to where they are now. I think they just probably waited a little bit long. I mean, hindsight's 2020, right? But they probably waited a little bit long to start increasing interest rates, and now they're behind the curve, and they have to, really try to get on top of it to control inflation.
Powell has a tough job right now.
Yeah, I certainly wouldn't want his job.
No, Okay, let's talk about name sentiment at Lowe's. Name is the National Association of Active Investment Managers, and tell me if I got this right. But this is kind of a questionnaire that goes out to active investment managers about whether they're long, short, and what degree of that. Am I correct?
That's right. So they look at how invested they are, and they can be 100%, or they actually be, I think they can be 200% net long, or they can be 100% net short. They very rarely will be 100% net short. That just doesn't happen. Or they can be leveraged long. But when you sort of look at this long term, it kind of ranges in a normal range, probably in the 65 to 105 range. We always talk about, once it's over 100, it's probably short term toppy. Once it gets kind of in the 60s, it's probably a lot of the froth has been removed, and we just hit sub 20 here. And you can see from the chart, it doesn't get down to this low very often. In the last 10 years, there's only been, 3 or 4 other instances of it getting to this level. So it really means that there's a lot of money that's been pulled off the table. If you look at a number of other different sentiment indicators, one of the ones that we like to watch is the CNN Fear and Greed Index, which again, isn't necessarily what people are saying they're doing, but it's actually what they're doing. That hit a fairly low level this week. It hit a number of 9, which is getting into extreme pessimism. And then you look at the AAII, which is the American Association of Individual Investors, which they survey 1,000 people each week and ask them, are they bullish, bearish, or neutral on the market? And it's continues to hit levels that, are extremely bearish. So sentiment is not something that you can time with, but it certainly is showing us that, the crowd is very negative on what's going on. And when that happens, it can take just the littlest bit of positive catalyst, positive news to swing people and swing the markets the other way, because right now there is doesn't seem like there's any bright light at all in the markets.
Okay, so but let's be honest here. When the name sentiments are low, I mean, this is considered the smart money, right? So it is a little scary, isn't it?
Yes and no. I mean, they're influenced by emotion as well, just like anyone else. And so, they're trying to protect client capital. And so, the best way to protect client capital is, if the market's declining and it continues to decline, is to pull money back, because then, if you happen to see a crash, you're not going to be involved. You're going to, have cash to invest on the sidelines that you can put in. And so, they're going to scale back, and they tend to scale back as the market's pulling back, and they tend to go back in as the market is moving its way up. So even though, it's professional money, it doesn't necessarily mean that it's removed from emotion.
Fair enough. They're not robots. They're people like us.
That's right. Yeah.
Okay, talking about crash. Let's talk about Target and Walmart. So Target and Walmart came out with their earnings. They were not very good. So just like we have to pay more when we're pumping our gas and buying our food, their margins are being squeezed quite heavily. So it didn't turn out well in the market. I think it was Tuesday and Wednesday, there was a major sell-off, and it wiped, between the two companies, $65 billion off of their market caps. What ensued the rest of the week?
Yeah, I mean, this was a trickle through in a lot of cases. Even companies in Canada were affected, even though they didn't report numbers, because of Walmart and Target, and the fear that the same type of factors are going to hit here, which were, like you said, they had massive increases, not massive, but they had increases in their costs. They had supply chain issues, and then they had merchandise trouble as well, where they weren't able to clear out some of the merchandise they had, and they had the wrong merchandise. And this is a function of, now you're starting to see that consumer behavior change, and you're starting to see it in this case at the lower end. So, it's not the luxury goods, but it's the everyday goods that people are buying that, they've now started to substitute. And that, this is where the inflation is really hitting the average ordinary person on the street, that, their gas tank costs more to fill, their house costs more to heat, their food costs more, and now they're having to make choices on how they're going to spend their discretionary money, or even their, staples money. And both Target and Walmart have been hit fairly substantially. We saw, follow through here in Canada, where Dollarama had a rough day on, I can't remember, I think it was on Wednesday, which was the day that the Walmart reported, and it went down because there's some thought that maybe that's going to affect Dollarama's earnings as well when they report.
Yeah, I mean, look, I think we're all feeling it. This is what scares me about this is that, you can go to your grocery store and you can get that little 6-pack of toilet paper, or you can do the extra drive, go to Walmart and get your big package and save a little bit of money. And I think we're all feeling that squeeze, and we're making Walmart and Target as a part of our consumer spending because we're all trying to be careful. So this is a little scary, isn't it?
Yeah, it is, but I'm a little surprised. Like, don't you have a whole room full of toilet paper like everyone else in North America?
I didn't do the toilet paper thing, but my pantry, if anyone ever needs food, is very, very full. But yes, yeah, no, it'll be interesting to see what happens there. And I think what they're saying is we're going to see a lot more of this as these earnings start coming out. This is going to continue to happen, right?
Correct. Yeah. And I mean, it depends on how well the management teams have been able to react to what's going on and how quickly they can react. And the bigger the company, often the more difficult it is for them to react quickly.
Yeah, absolutely. Well, good luck to Target and Walmart. Hey, I have one question for you. As far as Walmart and Target, you looked at that very scary chart. And we went through this in 2008. People talk about the major wins they had because some stocks just they dropped by so much. Do you think that this would be an opportunity to buy in on some of those stocks, or are you uncertain of where it could go next?
Well, on the other side of this, things are going to be, they'll be strong again, right? I mean,
Yeah.
this is the natural progression of markets and cycles that, we go from one extreme to the other. There's often emotion involved, so we get pushed to the opposite side of where we work, where we came from, and
Yeah.
that can get pushed to extreme. So you think back to '08. Yeah, I mean, it was a very scary time. The global economy, the global financial system was in jeopardy for sure and had to be bailed out. But once it did, then you saw fantastic returns for the next couple of years that surpassed where we went into the great financial crisis in a lot of cases. So it'll be the same with this. And with the technology sector and what we've seen transpire there, there's going to be some tremendous opportunity and some tremendous gains that can be made for the savvy investor who's done their homework and gone into the companies that are going to do very well, because of the fact that really across the board everything's sold off, and in some cases you have some massive sell-offs. You have 90%, 95% sell-offs in companies that are probably going to survive and do extremely well. It's not unlike what we saw in 2002 when 2003 rolled around. There was tech companies that sold down a long ways, and now 20 years later are doing phenomenal.
Yeah. So, this is where professionals such as Bruce are important if you're an investor to go and find out where those opportunities are. And that leads to number 4 on our list today, which is, are things so bad that they're good?
Well, certainly that's where we're starting to get to, right? Is that, sentiment is very negative. There's not a lot of positive headlines. And, historically, when we've got to this place, we're closer to the bottom than most people actually realize, because, things are so bad and the market is discounting ahead of the actual news. So it's not like the day the economy bottoms on a recession is the same day as the market. The market's already anticipating that bottom is going to be in, just like it was already starting to anticipate, close to a year ago now, when some of the smaller cap companies started to sell off. And then we saw technology last fall, and then we've seen, the S&P this year. And, that's the market discounting what it sees, which is, slowdown or recession.
Absolutely. Well, there's going to be opportunities. So just make sure that you're getting good advice, people, and doing proper due diligence, because there is opportunity still out there. Okay, let's talk about some CSE stuff. So as you can probably tell, my voice is a little hoarse. We had a very big week at the CSE out west. We had the annual VRIC conference. It's the Vancouver Resource Investment Conference. It's normally in January. It was moved to May. It was great to see people back in action. We had a reception. There was tons of people there. And it was great to just see, I think there was, even though the markets are bad, there was this hope in the air because all the brokers came out and all the companies were out. People were talking about raising capital. I think because it was just the first time we all got to be in a room again. So I think that there was good things that came from that conference. We also were a sponsor of a one-to-one show that Market Herald held, and people were raising money. So the markets don't look great, but there is stuff that's going on. We just released, if you go to our website, you can take a look what's going on at the CSC, the money that's raised. I think there was 180 financings. I should have checked that before I got on live. But that can all be found on our website. The one thing I want to ask you, we do have a new listing that will start trading as of Tuesday, May 24th, Acme Gold Company. I met the group that was at VRIC. I also met 2 or 3 other groups that are going to be listing with the CSC, all in the mining space. Bruce, we're seeing so much mining. What do you have any last minute thoughts on what's going on in the mining sector and how it will fare this?
I mean, we've seen such a rise in commodity prices because of all this inflation that now it becomes economic again for a lot of these projects to try to advance. And so, yeah, there's going to be tremendous opportunity because people who have discovered and are moving their project into production, there's always opportunities for companies like that. So we probably also in a cycle here where commodities have probably gone from being out of favor for the last decade to where they're now back in favor, and that could last. Usually they last close to a decade long, those cycles. So there's lots of ups and downs in those, but it could mean that we have a great resource market here for a number of years to come.
Excuse me. And just the general need for commodities is probably generally on the rise. PDAC has also moved, which is the Prospector Development Association of Canada. They have a conference every year. It's probably one of the biggest in the world for the resource sector. It is typically in March, where we're all trudging through slush, but it will be in June in Toronto. So hopefully we have some good weather. So we're definitely in that resource time of year. I did have the opportunity, as I mentioned, to interview David Rosenberg. That will be coming on to CSC TV. If you like the market recap and the stuff that we produce, make sure that you subscribe, and then we will let you know when new videos come out. Bruce, anything to think about going into next week?
Well, we'll see some more earnings in Canada, including some of the banks. So that'll be important. And then how the market reacts to being this level of oversold is always interesting to see. We're starting to see under the surface now some companies that aren't participating in the downside anymore, which is really encouraging. And, when that happens, then that's when we start to really, look under the surface and start to think, okay, are we closer to that bottom than most people think?
Yeah, absolutely. Okay, well, listen, on that note, it is a long weekend. Bruce, you have a wonderful weekend. You probably need a little rest. So go rest up and hopefully you get some sunshine. Thank you so much.
Thanks. Yeah, you too.
We'll see you next week.